Ladies and gentlemen, welcome to the 17th episode of the Futurum Equities podcast. This is the sunrise episode. We did a little early sesh. We got a busy day ahead of us, so we want to make sure we got an episode this week. And we got myself, Stock Savvy Shay, aka Shay Boloor. We got Daniel Newman, aka Danny Dimes. How's your morning treating you so far right now, Daniel?
It's early. Got up at 4:45. Did my thing. Been to the gym. Been back. Ready for the day. I got this, and then I record 6:05 after this. So it's a full morning of content creation, and then a whole day full of meetings. But I'm all good. Where are you? Why aren't you available at lunchtime? You gotta go lift weights. You gotta go eat some lunch. You got a date. What do you got going on, Shay? You gonna tell us?
No, I can't say it publicly yet.
Oh man,
I know, but something exciting. Something definitely exciting.
Shay's got a secret. Maybe he's locking in a new position.
maybe. But I mean, yeah, we should. I mean, you were just in New York this week. We did a lot of TV hits, you and I, this week, and I think one of the topics was clearly AI. Spoiler alert: AI is very real. I think the benefits of you and I just being so public and chest pounding about it at an early stage has benefited us at this stage because people want us to talk about it now because we saw where the puck is heading. And I kind of want to talk more about your newest position, because I think you're kind of expanding your AI utility bucket a bit. First it was CIFR. I don't know, IREN or CIFR, which one was first, but you got both those names. But you added a third one to complete the trifecta.
I actually had a third and a nibble on a fourth too. So
whoa,
I did, but I largely I did. I'm CIFR is my biggest position in this space. I mean, this is very simple. Let's back out on any of these. Like, there's a debate and an argument about which is the best. Right now, I think IRES Energy is the one that people are kind of overall saying is the best. Although, more deal transparency would make me happy with that company, in terms of, because they made some announcements this week, but they were, again, I still want to know who the CSP is. Like, that's one of the things that's kind of bugging me a little bit.
Do you think it's going to be Oracle next week?
I don't know. I think Oracle could go to CIFR. I don't know. We'll see. We'll see where that lands. But I think overall, the theme, we heard, Microsoft talk about not being able to meet capacity. They're basically constrained, and they're standing up more infrastructure, more NVIDIA faster than any other hyperscaler right now, and they cannot deliver. And so that's super bullish for all the GPU as a service players, so the NBIS and the CoreWeaves. And then, of course, all these sort of AI utilities, or I call them, AI energy mining companies. You have Applied Digital, you have IRES Energy, you have CIFR, you have WULF, you have a number of others out there. And all of them right now, and this is an interesting thing, it's like all of them are going to probably sell everything they can create. And there's not really a whole lot of debate right now of whether that's because they're the best or the worst, or which has the right mix of energy, or in the right geographies and the real estate. There's all these different parts and pieces. But if you're an investor, it's almost like you throw a dart at all these companies. It's like all of them are going to get consumed. So then it's like, which one's the best? And I was actually researching this morning because there's some of these interesting ETFs that are literally just these companies that are like kind of a whole basket of these companies. I think that's another interesting play right now for investors that want to get exposure, that don't know which one to pick, because this is a really interesting race, because it's like tomorrow a new deal gets announced. It's a new AI utility provider, and it's like, boom, off they go. And, you're seeing different paces of transition. Some of them are still mining Bitcoin. They're actually using the Bitcoins they're mining to buy a capacity to provide high HPC and AI. And some have completely kind of stopped their Bitcoin operations and are just going all in on turning their compute capacity into availability for cloud providers. But it doesn't seem to matter. It's like pin the tail on the AI utility company. Whichever one you pin right now, it seems that there is upside. But my newest position I did lock in was WULF. And the reason was basically the maths that I did and talking to some other sources I trust. Effectively, the deal flow they already have makes it worth about twice what it's trading at today. So with one like CIFR, where I kind of think it's kind of a potential multi-bagger, this one I look at as a pretty realistic opportunity to double. Again, not financial advice, not recommending anyone else to do this, but like I see a real path to this one doubling, and that's why I felt it was a good place to jump in and, again, continue to diversify the plays that I'm making in that space.
No, I mean, first off, the AI utility theme, I am definitely late to the game. I viewed all these names a couple months ago with the Bitcoin crypto miner goggles on, and that was a lesson learned for me on being more open-minded when I do research, especially in the initial phase. But right now, like I own the CIFR, I own IREN. TeraWulf is one I need to dig into a little bit more. I think CleanSpark is getting some attention, but you're right though. Like we're at a stage right now where all of these names are going to be moving with each other. Like there isn't that much diversity between the group of this name's doing really well, this name's doing really poorly, because you have to think of AI as this new kind of electricity. And I think that you and I both agree with this statement I'm about to make, where we're probably only about a quarter of the way through building the physical internet that powers AI now. And when we say that, we're talking like the concrete for the AI cities that everyone is spending billions of dollars of spending money on. So the way hardware moves is like at the speed of construction. I want to go back to my metaphor. So the companies that are solving real world problems like the power, the cooling, the compute are the ones that are having the physical bottlenecks at this moment. That's why NBIS is just freaking taking off right now. And it continues. Like after the Azure $17 billion Azure deal, people thought maybe it would retrace 50% of that move, maybe 25% because too much too quickly. I think it's doubled since the Azure deal. And I think that yesterday's commentary on the Microsoft data center crunch, like people viewed it as in a negative light because the wording was really weird, but it just highlighted that Azure is saying no to people because the demand is too much. Like they just don't have the supply issue. Bullish on NBIS. And another one, a data read we got this week was Amazon's raising their NVIDIA Blackwell GPU pricing per hour. For that is so bullish for all these names: IREN, CIFR, Galaxy, WULF, Speed, like etc. Because it's saying that these AI utility names are selling GPU power by the hour. So when Amazon moves the prices up, it effectively re-rates the whole market rates for everyone else. Like, it's just like how electricity right now is stupid expensive for consumers. It's kind of the same kind of philosophy for these AI utility names where their revenue per kilowatts an hour, per GPU an hour just got re-rated higher overnight just because the king of computes, Amazon, just had to raise their GPU pricing per hour. And that essentially is showing that supply is still tight because this does not happen after Blackwell shipments ramp up. Everyone kept saying depreciation is going to go lower the pricing of what you can charge. We're not seeing that at all. And I think that my biggest like heartburn probably of the space is they're capitalizing on the moments. You and I believe this moment is grand. The longevity of this moment could be years, not months. So I just don't know if there is like an actual long-term moat yet. IREN, I think there is because they have an AI cloud. They have the cheapest renewable pricing at 3.5 cents per kilowatt. But the others, like I still don't know yet. That's my question. I don't know for you, these positions, like do you see, I know you're a long-term holder, like you rarely sell shares in a holding. Like these AI utility buckets, do you view them in the lens of 5+ years, or is this something more of a rental?
Well, it might be worth sort of doing a little bit of an overall back out and look at the industry as a whole. Some interesting stuff that came out this week. NVIDIA published some TAM growth driver data. I shared this on X, and it's saying 3 to 4 trillion of AI infrastructure spend by 2030. That's not 3 to 4 total. That's 3 to 4 in the year of 2030 alone. You're seeing an exponential rate, a CAGR rate in this category of over 40% for 5 years starting in 2025. There's not even quite $1 trillion expected to be spent this year. By 2030, it's going to be $3+ trillion. So to me, it's like one is, the party goes on. Like what's going to power that? It's being powered by a demand for accelerated computing. It's being powered by generative AI and its application implementation. It's powered by the model makers. These are the companies that are basically investing huge dollars to train these frontier models. It's enterprises moving to agentic platforms. Agentic is going to create trillions. I think you heard Google with their enterprise announcements this week, quadrillion tokens. Quadrillion. We're past trillions now. Okay, I didn't even know quadrillion was a word. And then, of course, we haven't even gotten into robotics, factories, edge, and physical AI. So all these things are happening. It's creating this huge swell of demand. So that's kind of one thing. And then, of course, you've got kind of a market telling all these conflictive stories all at one time. You've got the Oracle story that hit this week. Okay. But let's actually back up before Oracle. Let's talk about the AMD story. So basically, OpenAI makes a $100 billion deal with NVIDIA. People are kind of calling this maybe vendor financing or sort of, they're kind of wanting to, the bears want this to be negative. I think it's very efficient what NVIDIA is doing. They're basically powering OpenAI to become the world's next hyperscaler. And they're basically taking all the hyperscalers out of the process. OpenAI is going to have their own cloud, their own applications, their own software, their own platforms. And so they become super disruptive there. But then OpenAI goes a week later and makes a deal with AMD, which was super interesting. But here's the long and short is Sam Altman knows and has been talking about this for a while, what anybody that's serious about winning the AI race needs to know. And that's that capacity and having access to compute, having access to energy, and having more than everyone else is going to be a differentiator that's going to enable them to win the race. They have a $500 billion valuation right now that really only makes sense if they become the world's next hyperscaler. They become bigger than Microsoft at some point or bigger than Amazon at some point. They have to execute. And basically, part of, I think, their strategy is they're going to replace enterprise and applications and software. They basically see a future where they are everything. They are the software. They are the infrastructure. They are the application. They are, who knows, maybe even providing the energy and the format. They're building their pin or their wearable or whatever it is. They aren't seeing a future where they're just part of the stack. They're seeing a future where they're the entire stack. AMD basically said, we'll basically give you 10% of our company if you go all in with us, prove it, become our first massive hyperscaler to deploy AMD infrastructure at scale. This is super interesting because now you got NVIDIA in a deal, you got AMD in a deal. And by the way, now you end up in a situation where Jensen could end up owning a piece of AMD indirectly through his investment in OpenAI. So the tangled web does exist. But it's really the efficiency that there's only about a dozen companies that are going to control the entire enchilada, the power, the infrastructure, the applications, and all the revenue related to this. So it's a really interesting set of circumstances, but it's also the reason that it's not so much of a bubble is the companies that sit underneath this are massive with great operating leverage, strong balance sheets, real customers. Most of them have moats outside of this AI stuff that is allowing them to continue to print money. And the valuations clearly exists because they can catch a bid at almost any price that they want to sell stock at.
I mean, first off, that was exactly what's happening right now. I love the way you framed it. And I think that the bears just like don't understand how a new economy is kind of forming. And when there's a new form of an economy that's going to be permanent and forever changing the old economy, you need to work together in very much in an insensual way, which is what's kind of causing heartburn for the masses. But guys, like this is all being funded at this stage with actual operating cash flow. Like this is just maybe the revenue demand is a bit inflated due to I scratch your back, you scratch my back, but it's all happening on real cash. It's not happening with venture capital. There's a monetization that they already know what they're going to do once they have all the necessary tools. Like they know how to fill those AI cities actively when the AI cities are actually formed. Like they're this plain and day, they're going to monetize it via tokenization, per query, per token. Inference is going to explode. All these AI workloads, they're going to be able to monetize in their suite of products. Like it's so different than it was back then. And I think it's okay. Especially right now, you're seeing OpenAI essentially doing all these deals. They work in a commodity of a space. Like LLMs are going to be a commodity. So I think you're seeing the signs of who's going to be the tier one and how the tier twos are going to be different from one another. OpenAI is infusing themselves in all these major deals, Stargate, AMD, NVIDIA, Oracle. They're screaming, we are too big to fail. We're going to be so intertwined with all these data center buildouts that Anthropic, Perplexity, you guys can do your thing, but you're nowhere in the same category as us. And now they're like essentially being involved in this high tide resolve boats because first mover advantage, Sam Altman does have that aura around them that's very Zuck like, that's Elon like, so he can attract the AI brains into his organization, and the model quality is going to improve from that because they have a great relationship with NVIDIA. Like they get the necessary computes to actually improve the model quality. Perplexity, and Anthropic, like I think they'll do fine. I don't know if they're never going to surpass OpenAI. That's fine. I do think that NVIDIA is just reiterating all these deals that they are the GPU engine for this new AI economy. Don't ever.
It's also just very different, though. Like OpenAI is really trying to be something that's much more than just a model company, and I think that's going to be the moat. Like, I'm not a fan of Sam Altman. I actually think he's diabolical. But I think there is a, you can say I don't like the personality, but it doesn't mean he's not going to do well. Clearly, he knows what he's doing. He's been able to continue to raise. He was able to untangle a really complicated web with Microsoft. He's been able to bring money in from, all the big money sources, continue to get valuation increases. And I think I said on, a couple of different TV segments I did this week that could be, from a U.S. standpoint, the very first $1 trillion IPO. Now, I know Aramco, I think, was a $1 trillion IPO, but not U.S. based, like the first U.S. based company to go out at $1 trillion. I think retail will probably be exit liquidity for all of these, investors that came in, because the amount of oversubscription at 500 billion, when for 5 years this company is going to incinerate cash. It is going to incinerate cash for another half a decade, and people are lining up around the corner to buy into the $500 billion round, which to me, like I said, is it's just indicative that either A, people just are completely exuberant, euphoric, and frothy, or people know that this is going to be the answer. And I think that it's going to be the answer in some way, that we will see most of the software industrial complex reordered, and a lot of it will be realigned because of what OpenAI is going to be able to do. We will see hyperscalers reordered because we are now seeing a new breed of hyperscalers being born out of access to capacity. Yeah. And so effectively, Jensen playing Kingmaker, Lisa Su and AMD having a really great product that needs to be proven. It's a great product on paper. It needs to be proven with software and implementation. You've still got a big wave of custom chips being built that are going to stand up more capacity. But I actually keep saying, like, there really is no situation in which you can build a chip and not sell it right now. It's like, if you can build an AI chip, custom XPU, GPU, you'll sell it. And so right now, it's a very interesting place to be, but we have the bottleneck of compute, and we have the bottleneck of energy. And those two things are why these utility companies are so damn interesting, is because, like, we know that the energy is actually going to be the biggest one. It's something interesting I read yesterday. I shared it, and it was along the lines of, I'm just trying to find the exact post, but it was effectively equipment shortages. So transformers that are required to basically build, energy capacity are now having 1 to 3 year lead times, with prices up over 70%. So
I believe that. Yeah.
Equipment is needing to be reserved 7 years in advance, and turbine capacity is booked through the late decade. So there's actual realistic risk that we can't build it fast enough. And this is why the smart money, I think, is in the OCLOs. The smart money is going into anything Vertiv, anything that in these miners, like anyone that can create a gigawatt of additional capacity is basically being sold as fast as it can build.
So, I think I read maybe the same article, maybe something else, but like the substations, the upgrade transformers, the package and ship, like all those things that connect, that pour new paths for the data centers, all those things that actually connect them all to the grid, they're backlogged. So I do want to ask you this, because it's just like in the early internet era, before like broadband, nobody really wanted to pay up for all these video platforms because they just knew the pipes couldn't carry the traffic. So like, I think we're in this like broadband gap moment for AI. And I think the next 1 to 2 years, we're going to be like kind of building the pipes. Like you mentioned, like the power, the racks, the cooling, the interconnect. What's your time frame on how long this specific like industrial component of the AI trade is going to last? Like, do you think it's I think it's going to be 1 to 2 years is going to be really where everyone's going to be, the real economics are going to unlock because the infrastructure bottleneck's not going to be easing out. Everyone's going to continue needing as much concrete as possible to build these AI cities. Like, how long do you think that's going to take?
I mean, it's going to be years. It's not a couple of years. It's, I think even Microsoft suggesting by 26 it's going to, reduce or no longer be capacity constrained, to me sounds wishful. It's going to take multiple years to build out enough AI capacity because, again, one of the things you're not considering is demand. So you also have demand isn't static. The demand we have today is like the beginning. A number of those use cases, I mentioned all the different ones that NVIDIA used to come up with that 3 to 4 trillion number. It's like, what's the impact of demand as agentic workflows find their way into businesses? I told you that Google number, a quadrillion tokens, what is the impact as autonomous vehicles scale and physical robots and humanoids come online at some increased level of utilization? What about, as these models become more complex and more, capacity constrained, like video models that now take a ton more data and use a ton more capacity than, say, a generative language model? Every one of these things, and by the way, they're just barely being used. They're being rolled out to very small numbers of people. Imagine all of a sudden that Sora 2 product is being rolled out to everybody that's using ChatGPT. What happens to capacity? So I think that the challenge is I think people are looking at this like, oh, it's some short-term build-out. I actually think the build-out has to continue for some time. The hope is that, we find economics, we find scale in things like nuclear. We find scale in things like breakthroughs of packaging, chips and stacking, and new nodes and efficiencies that allow for much greater throughput. That could be memory enhancements, but like none of this stuff on its own is going to allow us to scale and suddenly be no longer capacity constrained if the demand continues to rise at a rate that's probably faster than the next generation of chips is going to be able to support.
So let me ask you this then. Do you think software is dead money then until we get this, like, until we get this physical network that gets built out so that the software can actually start controlling like a lot of these AI workloads and workflows, the agentic workflows? Because right now I just don't think they're going to have their moment in the sun until the physical network is actually big enough to let all these millions of agents and workloads actually run at scale. So I think that I underestimated the physical AI build out phase of the hardware. I thought it was gonna be 3 to 4 years. I think it's gonna be close to a decade. Do you think software is just gonna be like waiting in the starting lines until that physical part's built out, so now they can actually start capitalizing at scale?
Well, this is what I shared yesterday. So I'll show you this. So flash that up really quickly if you can.
I'm not able to. Oh, here we go. Perfect.
So I was long software, short semis. Now I'm homeless. Don't be that guy. So bottom line is, I've said for over 6 years, semiconductors will eat the world. They are now eating the world. You don't want to be long software, short semis. You don't want to be long software in many cases. It's too risky. And this is where I was saying, like, OpenAI is literally looking at how it can basically replace all software.
That dev day was crazy. How much you can do in ChatGPT now?
Well, I mean, you want to generate a presentation, you want to create a graphic, you want to do a video, all those things used to be a different application. Mm-hmm. You want to create a table, you want to, anything you wanted to do, you could do. Now, like eventually though, wouldn't you rather just prompt or just talk to a pair of Meta glasses that you're walking down the street and say, flash me up my, my meetings for today. That's your, that was your, your productivity suite, right? Put the video screen on my video call. Like, do you need Zoom or can you just abstract that through the AI platform? The agentic platforms are going to do a lot of the work. And that's why this competition between SaaS companies, platform companies, infrastructure companies is so intense right now, is because it isn't just about each having their part. Each wants to do everything. They want to become the entire epicenter of the user, consumer, or enterprise experience. And like I said, that's the only way to justify these mounting valuations, is they have to be going after much bigger TAMs than just for instance, the subscriptions to Model 10s.
Well, I think we should talk more about the ones who can't really be displaced a bit, that are just like getting penalized with the buck. Like I'm talking the Workdays, I'm talking the Salesforces, like the ones that just own a ridiculous amount of like a data moat, for example. I think that I would love to hear your, because I want to say they're the blue chip SaaS companies, but maybe they are. They're just like, when I started investing in software, like it was more on the Palantirs, CrowdStrikes, etc. Feels like Workday, Salesforce, the IBMs, like those kind of companies are just like, IBM is not SaaS. I shouldn't have included there. But what's your takeaway on these like software companies though that are being priced like the AI tsunami is going to eat them up, but they have such a sticky moat with enterprises that won't go away?
Well, first of all, I think we always have to be careful to suggest that that any company can't be disrupted. Every company can be disrupted. I think we've definitely got companies in the sort of AI platforms that we think have either done early transitions, like you mentioned, Salesforce, that were very early to agents, but they still have the risk that, could an open AI with a data connector look at the Salesforce database and abstract you something that might be more user friendly. I mean, that's a real possibility. It would deprecate the value of that software, but might not eliminate, so much important customer data that exists. I like, the kind of ServiceNow approach of building that control tower, that kind of all-in single pane of glass. But again, you could do that possibly with a Google Gemini Enterprise and use an agent builder and all that data from across ITSM, across your HR workflows, across your CRMs. It could all be abstracted. So what I think is going on is a lot of people are basically placing the bets of who gets there. It's not, like I said, an immediate thing. This will take some years to play out, but there is a possibility of a depreciation of customer value. And there's also a problem with the business model. And that's the other thing that the applications companies are up against is, we used to sell for humans. You needed a seat because you were a user of a application. Now you actually need to pay for tokens. This is how many pieces of work or how many outputs that your agentic workers or your digital labor force is able to execute throughout a day. So you might have a workforce of 100 humans and 100,000 agents. And what's the model in terms of what people should pay for that? And how do these companies make sure that then they reinvent their business model, their pricing model to stay profitable and growing?
Well, let me ask you this. If you're a CEO of a publicly traded software company, not just in the CRM space, just a vague one, what would your like initial strategy? You're going to be like, obviously gloves are off. You're going to be in wartime CEO mode. What would your big rocks be as that CEO?
You got to break down anything that was a moat that created customer loyalty through friction. A lot of times, like a lot of application software, like they started off as this is really nice out of the box. You can quickly do project management, HR, CRM, ERP, whatever it is. And then by the time you built this custom monstrosity, they become really, really hard to use. You need special people trained to use them. You got constant add-ons. You got extra expenses. And the ability to even look up certain reports or get information requires all this extra friction. We are in a world now where, with ChatGPT, you basically ask any question, you get an answer. Now, are they all good? Not yet. But are they getting better, like literally every week? Yes. And to the point like where now you can feed it your own information and data and it'll enhance this thing in real time. You have to take all the friction out. Because what it used to be was SaaS was like a moat because it was like, oh, we put all this energy and investment into building out this SaaS use case for whatever, like I said, project management. Say it's not CRM, it can be anything. All our customers, our project data, it's all in here. Our workflows have all been built in here. We can't get off this thing. Mm-hmm. But it's like now you could literally probably run an agent in the background. You could actually show it a video. You could download a video explaining your workflow and then ask Cursor to write the application for you. Write an application that works just like this for me.
Yeah.
When you have that kind of technology, you have to say like, look, what is sticky? Your only stickiness can't be the pain of moving, because that pain that used to be so hard and so intense and so difficult to break is going to get easier and easier to break as AI helps continue to write more and more efficient software. And you can literally create and abstract your experiences in real time based on text or verbal communications. It's super disruptive.
Well, do you think software is going to ever go down the route of buying equity in these like kind of power companies where because a lot of these software companies are compute constrained because they were not the first in line to get enough computes necessary. Like Snowflake, for example.
I just don't think they have the balance sheets.
That's the workaround for the balance sheet, though, right now is just doing these equity deals.
Yeah, I just again, I know, and we can jump into some of that, but like we raising from strength versus raising from weakness. I mean, if these companies are going to dilute the crap out of their stocks in order to buy access to extra capacity right now, when they have a very sort of seen as uncertain future, they're going to get hammered. True. You know, the companies that are seen aligned to mega trends that are just in their earliest phases can do this, you know. And I know we advise IONQ, have a relationship there, but you saw today, right? Was it $2 billion raised again, 2.5 at huge premiums to the current share price, like warrants in the what was it, like 90s and up to 155 or something. Yeah. I mean, huge premiums. Space companies, like very little revenue, very little business. You've crushed it, Rocket Lab, ASTS. But people are clearly wanting exposure to a trend that they believe will be very important in the future, and they're willing. So quantum, unknown. What did I say to you yesterday? That investors know nothing about quantum, and so do their shorts. They also know nothing about quantum. There's like 10 people, including all the scientists and doctorates and researchers that actually understand this stuff, and most of them don't agree on any of it. So it's like this is a super interesting trend. Space is a super uncertain trend. AI and energy is clearly a long-term thing where people are willing to bet their money that these companies are going to get deals if they can create the energy and create the capacity. So this is just, you can raise into that, but you don't want to be a company that raises into weakness. And so I don't think that's going to be their answer. And I don't think they're going to be able to compete, because they're going to try to raise against who? Against the hyperscalers? Against NVIDIA? Like, who are they going to raise against? Like, they're going to raise to buy what? So they're going to be needing to go to the hyperscalers and get capacity through them.
No, you're right. I mean, it's just like we've been saying this, like nobody wants to live on SaaS Avenue, but like, I actually don't think software is going to be the biggest the mirage of opportunity, when I just don't think they're going to get a re-rating anytime soon. It's going to be more of a 2027, 2028 story. Data infrastructure players like the Mongos, the Snowflakes, Palantir is more of an operating system, but you can call them data infra if you want. Those SaaS companies, you're going to see their consumption increase. That's just way different avenue than SaaS, in my opinion. But yeah, it's going to be years. And also going back on the quantum space, like I just think that people are underappreciating the amount of policy that's going to be created in these themes going forward. Like the Trump administration, take your politics aside, you know how pro-business they are on a lot of these national security assets, AI, quantum space. Like Trump wants boots on Mars. He wants a rebuilt space command system. He wants to reassert U.S. dominance against China and Russia. And how do you do that? Is being first and the most disruptive in AI space and quantum. So when you see POTUS set a direction, capital is going to follow. And it's as simple as that. I know it's I'm dumbifying it a bit, but you have to think about it where this bucket's going to get re-rated because policy creates a floor, and companies, if you invest in category leaders in these themes, like the Rocket Labs, ASTS, IONQs, they just build on top of that policy floor. And eventually the business, the industry matures. Like the space economy is supposed to be $2 trillion by 2030. Like we're still way early. Quantum, like we're talking dozens of qubits. Like the hardware side is still so early, but I think that people are just like really underappreciating that the money is coming in now, regardless if the tech is still years away.
Well, and here's the thing though, you've got every asset's up at cash.
Yeah.
So literally, if you're sitting on cash, you're just incinerating money right now every day. And of course, the bears and the people that are sort of calling for the drawdown, which I don't think any of us disagree that there will be one at some point. I think that Solomon's saying sometime in 2 years, or even the Jamie Dimon suggesting sometime in 26 there could be a recession. It's like, great. What does that even mean? But like, you are just losing money every day that you keep yourself in cash. It's not even close. I mean, gold, silver, Bitcoin, anything else you're in is returns. And that's interesting because that isn't usually the case. You can't usually be doing well in defensive assets and in growth assets at the same time. But right now you actually can, which is super interesting. But the policy is grow our way out of debt. That's the policy right now. There seems to be no clear direction to do any cost cutting to slow down the economy in any way. The only plan is to grow faster. And of course, the AI spend, the CapEx spend alone is carrying GDP. So, people keep saying these companies don't have enough, put off enough cash to pay for this, but all of them going into strength, going into growth, and going into a market where people believe the revenues will continue to expand seems to be enough to give the confidence for every offering to be bought up. Every offering, every mixed shelf, every unique raise, it doesn't seem to matter. There's an investor, there's someone to catch a bid. Will the music stop? Will the chairs fall? Will someone at some point lose? Maybe. But heck, even if you, even at the, if you lost all the money in the 2001-2 bubble, if you just sat there and never sold $10,000 worth after it all had fallen, it'd be back to 8 times that today. So 8.6 times that today. So it's like, even if you do ride it down, the market seems to come back. And nowadays it just seems to bounce faster. It falls very quickly and it seems to bounce much quicker as well.
I also do want to call out that if everyone thinks their top is here, we're in a bubble, we're not going to pull back. Like, bubbles burst when a black swan event comes that nobody anticipates. I also think that, listen, the whole quantum bucket, space bucket, they're all frothy right now, but it's all perspective based. If it's very subjective, like, again, they've been trading on a story. It's not just space and quantum, it's also nuclear. Like, these names look very overvalued for how quickly they've moved based on a narrative, based on traditional metrics. But if you zoom out 10 years out, these themes are very real. They really are. And they're massive. They're massive, massive industries. So I think that people are just willing to bid up these themes because they know that nuclear, quantum, space, they're inevitable. So I want to invest in the early disruptors in those themes. But I don't know, right now, I'm looking right now, Rock Lab's up 10% today. At $70. ASTS was about to be at $90. These are now $25 to $30 billion companies each. Crazy. So I just think that be cautious out there. I also think that I haven't added in these names in quite a while. The beauty of buying early is before the FOMO kicks in is you got to watch like it's a reality TV show now on everyone fighting over those shares. Usually the lack of vision makes you have to pay a premium down the line. And that's exactly why the AI utility theme, like, I know it's gone up 600%, these names. I really do think we're so early in this theme. And I've been waiting for some kind of pullback on like the 8-week EMA. Maybe this earnings cycle will be sobering on a lot of these names on that pullback. But I don't know, looking at APLD's earnings yesterday, like, maybe it won't be. Maybe it's just justification and that it's as simple as these hyperscalers need more concrete to build their AI cities, and it's going to take years. And these are the best names to fill that industrial gap that we need to do that. And we're just going to pour billions into this.
Hey, look, for all the people, Shad, that doubted the value of Bitcoin and mining, now they've found value just by getting into that space. They actually had a different business that they'd just been sitting on all along by buying all those GPUs. But in all seriousness, I did struggle a little bit because, I like to be early. I hate when I get things wrong and I come in late. I came in on CIFR around 12, was where I entered on that one. And on Iris, it was like 30, something like that. So it was still had run a long way by the time I got into the space. I'm not a pioneer by any means in that particular space, but I can look at charts and I can look at metrics. And the metrics are basically saying, look, any energy these people can build, they will sell. They will sell the energy, they will sell the capacity. There's just that much demand for it. And so, you don't always have to be early on every trade. Sometimes you just have to pick the right theme and get alongside it. There's a lot of themes I've missed, and it's kind of like also just that deep belief. I know now that you're, me, I'm a massive SoFi bull. And now that it's like $28-$29 and seems to, be able to bounce off every sell, every time it sells, it seems to be able to bounce back nicely. But, people are like, well, are you adding? Well, I have a position under $10, like a very, very good position under $10. And sometimes it's hard mentally to add. Although when it did go back down close to the 200 day around 25, and it bounced off that, or was it the 50 day? I think it bounced off the 50 day around 25.
Yeah, 50.
And, I added I sold a ton of puts under $20. Because I'm like, look, if it comes back down, it's like, I still know what I own. I still believe in this thing. I'll buy it. And by the way, there's a ton, Shy, of volatility in all these mining company names where you could definitely, if you don't want to enter, like I sold a ton of puts on Iris at like under $10. It made good premiums when I first got in because there's so much volatility that people basically think it could go all the way back, that this is just a total bubble. And so my point is that, sometimes if you can't get in on common, there's other ways to make money on these trades. There's a lot of interesting ways to look because these names that are in space, quantum, volatility, the IVs on these things are high. And so you can get some serious premiums trading options on them. So that's another way to maybe play it for people that don't want to necessarily buy the common at these levels.
No, you're not wrong. Because like I own thousands of IONQ shares. I own thousands of Rocket Lab shares, ASTS. I might start doing covered calls. I just might slowly just capitalize in the IV and like things are frothy.
Yeah, same thing with bios. I did that with Viking, man.
Viking, the renaissance of Viking. It's
my common was like 40. So I bought a lot of common and I'm underwater on it. Like I was doing well when it ran, the phase 2 came, it dropped. But in the process of that, I also sold a ton of put spreads below 20, and I sold covers on my entire common position over 100. Remember, this is a stock that has the average price target over 100. I sold $145 calls on my position, got like $2 a share. And right Crazy. Before, and by the way, those calls went to like zero after the phase 2 data dropped. So I kept all the premium there. And by the way, right before the phase 2 data dropped, I sold, I covered on all those positions I had on the cover, sold on the puts. And so I got all the premium there as well. So I made a ton of premium on selling puts. I made a ton of premium on selling calls. And yes, I was stuck with that loss on common, but now it's marching back up. And guess what? As it goes up, the IV rises again. And I might sell those calls again. I think that company, not financial advice, just my personal belief. I think it could easily go for 120 to 150. That Metsera deal that Pfizer did. That company isn't nearly as good. The efficacy of their GLP. And then Novo did another deal that had a product that's in the same pipeline as Viking as well. That just made Viking worth more. So pharma, bio, and pharma is another industry that you get these high options. So that's another way you can play these things too.
No, I mean, Viking is my top 2026 pick in my small cap portfolio. I think these big pharma companies are clearly approaching Viking for an M&A. I think Viking is, again, gut feeling. I have zero ideas about this. I have not talked to anyone from the company at all, but I think they know they deserve much higher than their current valuation right now, maybe even more than $100 plus. They have the manufacturing capabilities once their phase 3 data is going to be prove that maybe they can actually solve oral for GP1. Like the oral GP1 is massive. I think a lot of people are actually scared of needles. I think a lot of people, that's a chat GPT moment for GLP-1s. As soon as there's one company that can solve the oral part of GLP-1, if it's Viking, it's going to be a much higher company than $3 billion.
As a peptide guy that does that has converted himself into a pincushion, I can tell you that needles are not super convenient. Sometimes they do work better. Injections do work better. So getting a high efficacy pill definitely will break. I call peptides are the AI of human evolution. And I think that they're about to have their moment as well. I'll have more to talk about there too pretty soon. So, it's been a good week for Viking for sure.
So I know we're about to wrap up on time. I do want to talk more about the AMD massive re-rating. It's up 40% this past week. I kind of want to get your thoughts about it more because I'll tell you my quick take on why this move is deserving. And a lot of people just think it's just AI froth on lack of substance. I truly believe that OpenAI cemented or gave a stamp of approval to AMD that they aren't just second fiddle. Like they actually validated their chip quality. Like this is the by far the biggest tier one client of AMD, in my opinion. That's just going to continue us. Like the structure of the deal matters so much to me when I saw it initially, because instead of OpenAI just writing a fat check for chips years away before they actually needed it, AMD essentially gave OpenAI the right to buy 10% of their stock. You could view that as AMD has to sell their part of their body in order for OpenAI to be willing to do the deal, where NVIDIA customers have to like essentially do the complete opposite. So that's how shows how strong NVIDIA is. But I just think that this gave the stamp of approval for AMD for a lot more customers to also feel more comfortable buying into AMD chips, because they've always had this little brother narrative on NVIDIA, which is still there, but now maybe the little brother's actually growing up a bit. What's your takeaway on that deal? And do you think this
Well, I think
re-rating
the
is gonna
maths
continue?
are. I think it's something like $96 billion worth of equity grant if they execute on all the different milestones as what OpenAI would get. I think what AMD in terms of sales is significantly more than that, and of course, I think their market cap would go up significantly more than that. So I think it was a really smart deal. I think I called it sort of brilliant, is what I said on TV, because Lisa does not have the balance sheet to do what Jensen did. So this was a very creative way. And the second thing is she just gave all the incentive to Sam Altman to be successful with AMD, because AMD needs to succeed for OpenAI to get the benefit. If OpenAI wants to get all the shares that they've been committed, they have to see AMD reach the milestones on share price. So it was a really smart deal, but it was unique. It's very simple. I mean, nobody has the firepower right now that Jensen does. You don't want to go in and try to make the same kind of deal. They don't have the cash, they don't have the capital, they don't have the product yet. I mean, this is a future product. So they also just got the blue chip customer. And, if all the other hyperscalers, by the way, are going to, go really big on their own chips plus NVIDIA, AMD had less of a role to potentially play in some of those other hyperscalers. So now they basically made a deal. They're now partners. This is like two biopharmas creating a JV together. They basically launched a JV in many ways where their success is completely hinging on each other. So it was a massive bet. I think it's got an opportunity to be a really successful bet. AMD still has a lot to prove. AMD has a lot to prove with its next generation GPUs, that it can be a success. And of course, I think it can be, but that's basically, now they have their blue chip client. They have their superstar that can be a proof point, and they've got a company that has the talent and the capacity to make it work.
I mean, for the AMD shareholders, I know it's been a tough couple years. I think you guys all should feel validated. This is exactly why conviction matters so much in this game, where you probably held through the years of frustration of hits 160, goes back to 90, that vicious base it's been in. It's breaking out now. And you guys should all feel very proud for yourselves if you made it out and through. But yeah, this is episode 17. Let me know what if you guys like this time zone better than the other time. I think our producers let us know we had a record amount of eyeballs this episode. So maybe this is the new time. We'll see. But any closing off words? Any closing statements?
Just, next week, strap in. We have everything is still working in the favor. We're about to come back into earnings season again. So it's like, it feels like we just blinked and then we finished. But by the end of the month, we're going to have the next Fed meeting. We're going to see if policy stays in place. That's going to be super interesting to watch. I think more rate cuts are coming. I think that's been the indicator. But remember, the Fed's flying blind now. Government is still shut down. I mean, heck, we're just looking right through this kind of stuff. Like we talked about it for like a second. And I mean, now it's just like, oh, the government shut down, oh, well, no big deal. But the Fed's going to have to make decisions. Do they want to continue this rate path? We've got the government needs to make a budget deal. If you're in the pharma or insurance, the ACA deal is going to be big in terms of impacting a number of different stocks and names. But of course, this AI thing, it's just going to be a continued barn burner of just news. I think each week, each company is sort of competing to have the next big thing. Remember, we were talking about Intel a few weeks ago. It's like, what happened to that? Remember, we were talking about, it was the circular financing and the Oracle deal. We didn't even talk about the Oracle thing this week.
Oh my God, yeah.
The disinformation about the Oracle.
The disinformation. That's a good term.
I'm just kidding. The article from the information about, supposedly they're losing money. And by the way, by some accounting standard, they probably are. But, I just think it's super disingenuous that most companies, when they're building factories, understand that there is a period of time and what costs you load in, how you interpret CapEx, how you interpret depreciation and rapid depreciation onto an income statement versus whether or not there's any demand for these things. You can't have demand until it's stood up. And by the way, our entire thesis today was that there's insatiable demand against every bit of capacity that can be stood up. So you're telling me that no one wants the Oracle GPUs? I just
hard to believe.
I struggle. But look, I've been wrong before. It's possible I'm wrong again. I look forward to that day that someone's going to say, hey, look, this Oracle thing was real. Okay, whatever. I was wrong. But at this point, trust but verify. I don't trust, and I'm verifying at this point. So that's where I sit.
No, you nailed it.
But hey, for everyone out there, by the way, we do have a YouTube channel, which is pretty cool. It would be great, if you guys want. We have tons of shorts, clips, cuts. I'd love for you guys to come over there. We also, of course, are on Spotify, and we are on Apple, so you can get us there. Work out with us. And of course, share, tell your friends. Again, none of this is financial advice, but hopefully, full of good ideas, super entertaining. And Shay, are we done again? Is this like another 2 weeks now? We're not gonna be back because you're taking another trip and you're going away. And
yes, but there's going to be a special episode that you're going to be doing with someone else. That's going to be on top of a very exciting announcement we're going to have in a couple of weeks. So just nonstop news flow on the Futurum side. But yeah, this face will not be seen on this pod for a couple of weeks.
Well, we'll miss you, man. We'll miss you.
Yeah. Well, appreciate you all for having us on your Friday morning. Enjoy the rest of the day and enjoy the weekend. See you guys next time.